Hello, and thank you very much for joining today for this joint presentation between Nokia and Juniper Research on how to stay ahead of financial fraud and the power of telecom network intelligence in fighting this fraud. And how you can greatly increase the effectiveness and the strategies involved to tackle various elements and fraudulent tactics within the financial sector. My name's Sam Barker. I'm VP of Telecoms Market Research at Juniper Research, and my responsibilities lie with our research and consultancy output within the telecoms and connectivity space. All of the content, including forecast data, recommendations, will all be coming from either myself or my team. Joining me today from Nokia is Alex Walling, Head of Business Development, Network as a Code. Hi, Alex.
Hey, Sam. Great to be here today.
Perfect. What we'll do then, today's presentation will last around 45 minutes, after which we're going to have a Q&A session. If you notice on the platform, there is a box for questions and answers to the right. If there are any questions throughout the presentation, please put your questions in there, and Alex and I will be answering these questions at the end. Just quickly run through the agenda for today. So what we'll do is we're talking about the impact of fraud in fintech and how we can use telecoms networks as for signals that can identify or detect fraud. So we'll be looking at where fraud is, how important detection in real time is, especially in the financial sector. Running through a few findings from a report that Nokia and Juniper Research have done together on the state of fraud and the importance of signals within signals from telecoms networks. And then we'll start looking at the emerging threats to fintech. And Alex will be taking you through some examples of network signals and Nokia solutions in this space. So I'll start off talking about the evolution of fraud. When we talk about fraud itself, we need to talk about the cyclical nature in general. A common theme throughout the presentation today will be how fraud evolves, and more importantly, how the tools that are available to sort of financial institutions and fintechs need to evolve with this evolution in fraud. At present, there are quite a lot of different types of fraud that can be achieved. SIM swap, card not present, and account takeover frauds. I'll be going through those in a few more minutes. Additionally, what we also need to discuss is the role of AI within this fraud, especially when it comes to the financial space, with the sheer volume of transactions that occur daily, digital banking ecosystems, and the tools that are available to help fintechs identify potential fraud, fraudulent transactions, and more importantly in real time. But to look at the cyclical nature of fraud, I put a quick infographic there to the right, and essentially what you can do is you can start at any point in that cycle, and it revolves around in a clockwise position, which essentially means that there will be in any market any technology will be in one of these states. If there is an opportunity for fraud to be achieved for monetary gain, then a fraudulent player will enter that market. Service provider will identify it, block it, and then the fraudsters will evolve, and the fraud detection and mitigation solutions will need to evolve through it. Once it becomes unprofitable, fraudulent players tend to move on to other areas. So I just want to quickly go through some types of fraudulent traffic that Juniper Research has tracked in the report. One of the main ones out of the three common fraudulent tactics we've identified is obviously ATO, or account takeover fraud. Now this is illegitimate or unwanted access to an account. It is quite often a bank account or a financial account, and this can be done through various means, but one of these is obviously gaining access to multi-factor authentication through a fraudulent SIM swap and receiving a one-time password to a different phone number associated with the account to change the password or the PIN code to it. Once that's done, there are some massive potentially losses to fraud for not just consumers but for enterprises as well. That has a substantial impact on businesses and consumers, but more importantly, also it's open to sort of social engineering. Additionally, we've got what e-commerce fraud, which we've identified as a type of fraudulent activity that's on the rise, mainly down to the rise of e-commerce ecosystems and increased reliance on e-commerce. We've noticed that the daily transactions are growing quite significantly, and we anticipate them to grow to 1.4 billion daily globally by 2029. Mainly down to more and more reliance on e-commerce, more and more reliance on digital banking. And lastly, one we've also identified is card not present fraud. This is where essentially, as the name suggests, the card is not present when making the transaction. Card details have been stolen, and again, this also has impacts for not just consumers but merchants and retailers as well. With the need to sort of recover these funds. And something very specific to the financial sector is the importance of real-time detection and mitigation of fraud. Look at the vast number of transactions. Having the ability to detect these in real time, if you take instant payments, for example, which are transactions that are completed in less than 10 seconds, there is a significant need to have signals from networks that can identify what potentially fraudulent activity very, very quickly to block the fraud before the transaction is completed. That's because from a merchant or retailer or a fintech's point of view, it's far more cost effective to block a transaction before it's completed rather than all the indirect costs that follow in recovering that payment once it has been. And this needs to be done with signals in real time. If that transaction is completed, these indirect costs, time spent on investigating the cause or the source of the fraud, are all costs that are levied on the various stakeholders in recovering it. And to go back to the vast number of transactions, making sure that solutions are in place to minimise the amount of these fraudulent transactions overall in the aggregate will have a huge impact on minimising the amount spent on recovering these losses. And to talk about this, the signals in telecoms networks. So we will go through these in more detail, but looking at data from mobile subscribers or geographical location or what came, whether the phone number has been SIM swapped over the past 24 hours, give a real indication of whether the transaction or authenticating the user can be trusted or rejected. And Alex will go through this in a few minutes, but there's a wealth of data that the telecoms networks have to offer to fintechs that enable them to make those decisions not only more efficiently, but at a much faster rate. You can just look at the various different use cases for authentications. It's not just authenticating a transaction in real time, but authenticating new users or onboarding new users to payment services where telecoms networks really can provide value to fintechs with these network signals. As part of the report that Nokia and Juniper Research have done, we have looked into a large scope of what the fraud is and the addressable, essentially the addressable user base for fraud. So there is far more information in the report, but we want to give you an overview or a taster of what the landscape for fraud looks like today. So the most common type of user authentication today is one-time passwords or multi-factor authentication. And it's mostly done over an SMS, which is a very old and outdated, not outdated, but very old technology. But it's becoming increasingly susceptible to fraud. It's very one-dimensional, and it's becoming quite costly for some enterprises. So these enterprises are looking for a fraud detection and mitigation solution that provides better value and is less fraud. looking at some potential addressable users or what's going on right now, globally, we estimate around 2.5 billion individuals globally that use are banked, who use banks to protect their assets and their financial wealth, and that means there are 2.5 billion people that need to be authenticated by their banks as well. One of the key things that we found in the report is that this year, the expected cost to consumers and enterprises from account takeover fraud is going to be $13 billion. And this can be attributed to the poor authentication process that many banks and many fintechs still use today. As fraud sort of continues to evolve, what we want to see in the market is more and more fintechs and banks taking on the new services that are coming on, becoming available to them right now, that can help them, fight fraud. At the moment, we do believe that the telecoms networks are underused by many fintechs. But as I mentioned previously, there is a wealth of sort of network signals and data that can be used. And one of the things we looked at in our research was that there are increasing number of examples where SIM swap fraud is being used to defraud not just consumers but enterprises as well. Essentially a form of identity fraud. What we'll do now, as part of our research, we have identified some 5 key countries that we believe are going to give great examples of not only how fraud can be on the rise, how fraud is evolving, but also an impact of how these new network signals can help fintechs and financial institutions that are adopting them. The first one of these is obviously the US. I will say for all these countries, we do have a quick slide on some data that we've implemented. They're all in United States dollars, and they're all for estimations for the end of this year. We'll start with the US. So the US is a really good example. It obviously has a massive addressable market and a massive population, very heavy eCommerce users. From our data this year, we're expecting 205 million out of the 330 million population to be using eCommerce services by the end of the year. That represents a high proportion in comparison to other developed countries as well. It's a country that's very much reliant on e-commerce, but from a fraudster's point of view, not only is the country a heavy user of e-commerce services, but is a very affluent country as well. That's ideal for fraud. As the old saying goes, fraud goes where the money flows, and the US has always been a key example of a region or market that attracts fraudulent players the most. But having said that, though, it is also a market that is, in our opinion, at the forefront of AI. Now, we do caveat that with the media hype around AI today. AI to us is automation. We understand that many fraud detection solutions across various different types of fraud have different use cases and different ways of working, and within fraud, again, it's all about automating the detection of different types of fraud. Even so, fraud is still very prevalent in the US. As an affluent country, fraudsters still will be attracted, and what we're seeing is, even though there is rising fraud in the country, it is pushing stricter requirements and more investment into fraud detection solutions. Essentially, there is a case here to be made that with the US being so affluent, what we're going to see is more of the new types of fraud being first identified within the US. We expect the US to be amongst the first countries to implement new AI technologies, or should I say new services based on AI that can detect fraudulent transactions. The next country I just want to look at is Canada. Again, it's another country that has a large population. Over 27 million people in the country use digital banking services. It's a country that, again, a close geographical neighbour to the US, is also experiencing rising fraud. However, we do need to know actually that what we're seeing is a real slowdown in the growth in the occurrences of fraud, but still rising costs to fraud, owing to fraudsters being much more clever in the way they, how they target companies, how they target individuals and enterprises, as well as their tactics in extracting more monetary gain. Essentially, the fraudulent tactics are becoming more and more complex. So whilst the older tactics, things like it's maybe involve social engineering and not working as well as they used to 4 or 5 years ago, the more complex tactics that don't necessarily need social engineering are becoming more prevalent. That is a good indication that essentially users of maybe digital banking services in the US, or digital services in general, are becoming more savvy to fraudulent techniques and the ways in which fraudulent players go. But that has led to, as I said, to the cyclical nature of fraud and fraud evolving to fraudsters now targeting more complex tactics, which require, again, more advanced signals that can detect fraud quicker and more efficiently. Even though the occurrences of fraud are going down in Canada, or slowing down, should I say, the losses are still going up. For example, total transaction fraud rate we've got down there as 1% is higher than many other countries we've looked at. One thing we've noted in Canada as well is they have a high degree of AI automation in their fraud detection solutions. It's a country that's primed to sort of benefit from the signals that telecoms networks can offer by assessing them quickly, actions, and minimizing the fraud. We'll just move on to Europe, and we're going to start with France. A notable element to France is there is a low base of e-commerce users, but that doesn't mean that fraud in France is any different. It still suffers high losses to fraud. From our analysis, we're expecting around $128 million consumer and enterprise losses to account takeover fraud this year. We expect that to reach nearly $200 million by the end of this year. By 2029. I think that's a great, even though it is one of the lower forms of fraud, it's a great example how, if the correct signals were being used or being implemented by fintechs and banks, then this growth could be reduced or even slowed or even corrected as account takeover fraud becomes more and more prevalent, more and more successful, and the losses to it increase. One key thing to note about France from our research is that it suffers quite highly from things like investment scams and bank advisor scams. But again, these are also achieved by looking at the poor authentication processes that many have in place. France is a country that although we know are implementing some technologies that enable telecoms network-based signals, they're still quite reliant on more outdated technologies and more outdated verification solutions. And quickly, we just move on to Germany. As a general rule, Germany is a country that is highly adoptive of digital services. But one thing of note in comparison to other countries we assess is they are more cautious of digital banking solutions. What that has led to is there's a smaller than average impact of losses over things like account takeover fraud. Now, whilst on the initial sort of review of that, that probably would lead you to conclude that they're more adept at stopping the impacts of things like social engineering. The country also has high volume of instant payments and digital banking solution penetration, and it leaves it open to sort of more novel forms of fraud, like APP or authorized push payment fraud in where those APP transactions are instant, so less than 10 seconds. Now, what that means from a fintech's point of view is, because there is such a caution around digital banking solutions and the trust in the digital banking ecosystem, what you would expect in the country, in Germany, is that even with instant payments, these transactions should be blocked. And the consumer should never need to know about them or need to deal with them. Now, this is an issue when there's a lot of instant payments in the market at the moment. And at present, some fintechs and financial institutions in Germany will need those real-time signals to be able to block them. There is always going to be a trade-off between convenience and security in any industry. When it comes to instant payments, if a consumer is expecting both payments to be instant and fraudulent instant payments to be blocked, the real-time element of signals from telecoms networks are a major plus in being able to block traffic. And finally, one of the things, the last country we'll look at by itself is the UK. The UK in general has one of the highest adoption rates of digital services within Europe. Over 41 million of the 60+ million population have adopted digital banking today. And additionally, the UK is a financial hub with lots of new digital services being launched in the UK for Europe and other areas of the world. Now, to fraudulent players, that means that the UK is very much an attractive proposition for fraud. It's a relatively affluent country as well. So from a fraudulent player's point of view, there's much more room for financial gain. One of the things our report has identified in a similar way to Germany is that the UK is open to APP fraud, so instant payments. In the same way as to Germany, the UK is also going to be expecting more as the payment system evolves. The average UK digital banking user is going to expect banks and fintechs to be able to identify and block these instant payments before the money has left their account. Because there's a high level of digitalization in the UK's financial sector, there's also a higher expectation, and it comes back to what signals fintechs and financial institutions can use to better block this fraud. And if they're not in the correct position to be able to do so, it will lead to an increase in fraud, occurrences of fraud, and then obviously an increase in losses to fraud. And if this happens with the financial institution, you will end up losing consumer trust in your digital banking service provider. And one last thing to know about the UK is that, again, similar to the US, it can be considered a leader in AI in terms of what's being implemented, what's being new, how these new models are being used with machine learning to identify fraudulent transactions quicker. So let's just talk about the emerging threats to fintechs today. One of the things I'll just quickly put on the left is taking an example of how an e-commerce platform or a retailer or a merchant can, the various different areas that are involved in verifying a transaction quickly. And we can see that obviously there are many different players. It's an active check, so it's done very, very quickly, but this is obviously just for e-commerce and not just the wider financial space. I think the point that needs to be made here is that essentially fintechs, financial institutions, cannot just rely on the tools that they have now. Fraud is evolving. They need to ensure that the solutions that they have now are able to detect fraud as early as possible, especially with the speed at which, not just the speed at which payments can be made today, but also the vast amount of, or the vast volume of transactions that are occurring, and that's only expected to grow. The main way in which Juniper Research has identified that fintechs can do it is using the signals from telecoms networks. this enables fraudulent transactions to be identified a lot quicker. Enables more convenience for the user when it comes to that, but it also enables these transactions to be blocked before they're completed, which in the long run and in the aggregate will save financial institutions substantial amounts of money. And lastly, one of the things I just quickly want to talk about is AI in fraud detection. And how important that is. We've spoken at length about the signals that can be provided by telecoms networks, but we also need to talk about how these signals can be used once they've been implemented. So not only with the vast amount of data that can be taken from telecoms networks in identifying and blocking fraudulent traffic in real time, this data can also be used to detect fraudulent patterns more quickly. Evaluates a large number of transactions, automatically. And as he said in the previous slide, eCommerce is a really good example of that. What we're seeing is a growth in the number of transactions that are happening over eCommerce payments. And with that growth and with the spend over eCommerce platforms, of course, fraudulent players are going to be attracted to the spend, and they'll be looking to gain monetarily. And obviously that means e-commerce platforms lose out. Now, if you transfer that to the wider financial space, financial institutions and fintechs, they're in the same position today. It's not really a case of we believe they'll be in the same position in 2 or 3 years' time. They are there today. And the solutions that are available to them and how they're growing is certainly something that we believe, as that cyclical nature of fraud accelerates, the signals from telecoms networks are well positioned to help tackle fraud, such as account takeover fraud. One last thing to note is that obviously that fraud varies by country. There is no one size fits all solution. There is no one set of data that can be applied to every country or every region or every sector. And this is where AI comes into play, because it can be used to identify the different types of fraud, different fraudulent tactics across very different markets. So what I'm going to do now, I'm going to hand over to Alex from Nokia. He's going to take you through sort of some of these signals that I've been talking about in a bit more detail, and Nokia's solutions in the space.
Yeah, thanks, Sam. Really excited to share a little bit more about how we actually combat everything you laid out. I think it's really important to align on the fact that this is a problem. It's something that banks, fintech companies are actively looking for solutions today, and it's something that we're actually having tons of conversations around. And what I'm really focused on is kind of really taking this and actually developing the applications and solutions to help fight against this. So I'll share a little bit about that. If you can go to the next slide. Perfect. So some examples of these signals from the 5G networks that can actually help fight against these account takeovers, card not present scams, things like that. We detailed a little bit of these, but I'll just go through in a little bit more detail. So SIM swap detection is one of the most common ways that account takeovers actually happen today. So the attackers find a way to either get the physical SIM card or an eSIM transitioned into a new phone that they own. So they start getting the one-time passwords or other authentication methods sent to the phone that they own. So being able to understand how recently that SIM card was transitioned into a new phone is a great way that these fintechs are being able to fight against this type of fraud. Number porting is when a number is sent from one carrier to another, and that actually bypasses some of the security checks that were originally used in the initial network. So understanding when that porting happens is a really great way to help fight against it. Roaming status is when a device is currently on another network, which is another way that hackers can or fintech companies can help identify when this fraudulent activity is taking place if that phone's in another country or on another network. Call forwarding status helps identify when scam calls are being forwarded to a new device that isn't expected to be that phone number initially dialed. The IMSI and IMEI mismatch is when a SIM card and the device don't actually match the expected patterns to be able to identify that those are the same device. Location verification is a really great way to be able to understand if a card is being used in an area that they don't expect it to be used, be able to go verify where that mobile device is and see if it matches up with where that card's being used. Network authentication logs help provide more data around when successful or failed attempts to authenticate to the mobile network. So again, when doing these number verifications and account takeovers, understanding when the network logs are misaligning with what's expected. Great way to help fight against it. Subscription type indicates whether it's a prepaid or postpaid phone plan. Often being on those postpaid phone plans or prepaid, this can be used in those algorithms to help build a more comprehensive risk scoring algorithm. Account tenure measures how long that number has been active on the network. So if it was created within the last 24 hours, obviously that's something that the bank or financial services institution might want to do some deeper looking into that user. And then velocity of changes just tracks how recently the SIM card was swapped, device was swapped. Kind of very similar to that SIM swap detection, just across a number of different parameters, not just that single SIM card parameter. Next slide. And so with this, really what Nokia is bringing to the table is we've launched our Network as Code platform, which is a platform identified as the #1 network API platform by a few different research firms. We've actually brought together over 55 different ecosystem partners, including solution providers, system integrators, hyperscalers, CPaaS providers, and most importantly, global network CSP operators. And we're really focused on, again, as I mentioned, the real world use cases where we can actually work with these enterprise organizations and help fight against this fraud. Both as kind of the leader of business development for this platform as Network as Code, I'm really proud of what we've been able to do, but also as a consumer of banks and financial services, I'm really seeing an uptick even in the last year. Literally while we're on the webinar, I saw a message that was very clearly a spam text message that's trying to social engineer me into sharing my account credentials. And so very personally, I'm really proud of what we're doing to help fight against this and make it easier for myself and everyone else in the world. And so what Network as Code is, if you want to go to the next slide, is really focused on providing these network APIs to help with multiple different aspects of the identity and fraud management platforms. I really kind of look at this in 3 core areas. The first is during account creation and user onboarding. So being able to provide simple KYC verification or know your customer verification to help streamline that onboarding process. So as someone's applying for a loan, creating a new bank account, applying for a new credit card, basically being able to do a match on is the information that they've entered matching what's actually linked to their cell phone plan. And so this is a great way for those fintech companies to actually access that data, that really rich, valuable data that's in the networks, and match it up to what they're seeing on their end as well. Then once that account has been created, we actually help with the ongoing authentication of that user. So being able to use silent number verification, that SIM swap detection, really to ensure that as a user continues to log in, access their data, or do large important transactions like transferring money, we can actually help authenticate that user, again, through those number verification, SIM swap detection, sometimes even that location verification. And then last but not least is really just strengthening fraud detection algorithms with all of these data inputs across the board. We're talking to a lot of credit card networks and global banks, and really the way they see this is one aspect of their fraud platform, and accessing this type of data will greatly improve their ability to detect fraudulent transactions or synthetic identity creation. So we put together a couple of different use cases based on our customer engagements that will help articulate how this is actually happening in the real world. So as I mentioned, kind of during that account creation and onboarding process, being able to use the KYC match, number verification, SIM swap API, and device location API. So the challenges with what's happening today are slow onboarding processes, needing to do really comprehensive kind of checks on who this user is. So by using these APIs, we help ensure a smooth and secure onboarding process, more accurate verification of who that user is, making sure that we're actually meeting the legal requirements around compliance and fraud reduction. Many countries are actually bringing out regulation every single month, every single quarter. And it's provided as a simple API solution. So it's really low cost for these enterprise organizations to actually do the integration and get onboarded. Next slide. Then we go into that multi-factor authentication. Really, this is going to be driven around that number verify API, which is helping provide a more streamlined experience. I'm sure all of us have had the experience of getting an SMS one-time password, having to go back to the website, type that in. It's kind of a clunky, not very good user experience, or having to use an authenticator app and go locate that 6-digit code, bring that back, enter that in. Again, really poor user experience. So it's providing this friction that is not intuitive to the user. We have taught them that this is the most secure way to do it, but what we see is a more secure way to do it, helping prevent the interception of these one-time password codes, as well as a better user experience where it's done all done behind the scenes, so the user doesn't even need to see it happening. And so with this, we're using that number verify, SIM swap API, and device location. Again, all provided as a simple, easy to use API interface. Next slide. And with this, we really focus on this account takeover attack. We find this is one of the most common areas that banks and financial services institutions are struggling to help fight against. And so we really are working with many of our customers just with this kind of standard API for SIM swap detection to help fight against it. So this could be on an ongoing basis, being able to do this check and verify that the user is who they say they are. Next slide. And then the last use case that we're working with a few potential customers around is around this device location information. So as I mentioned, the idea of a card being used in an atypical location is really common, and there's a large amount of fraud happening with this every single day. I personally travel a lot internationally, and so I'm constantly getting texts from my credit card operators basically verifying that I'm actually in the location I say I am. And so I have to go through the process of responding to that yes to make sure that my credit card doesn't get blocked. And I've actually had it get blocked a couple of different times. And so imagine a world where the credit card operator, your bank, could actually just do a verification that you're in the country that your credit card's being used, not only providing a better user experience, but a more robust verification of that this user is actually where they say they are. Because if your SIM card or phone number has been intercepted and they send a text message to verify that you're in the region you say you are, well, that's another way that these accounts can be taken over. And what I really want to emphasize is that these are some great real world examples of use cases that are being achieved today. And what Nokia is doing is really doing this at a global scale. So when you think about these banks and financial services technology companies, instead of needing to go to each and every different operator and get this data, sign up for an account, access an API key, what Nokia's Network as Code platform is doing is providing this as a single standardized interface across multiple different networks. So it really streamlines that onboarding process for the developer and for these enterprise organizations, providing a simpler and easy to use onboarding experience, but also ongoing maintenance of new versions being released, new APIs being released. And so we're really excited about what we've been doing. And with that, I'm going to pass it back over to Sam just to head over into the Q&A and wrap up here for this webinar.
Yeah, thank you very much, Alex. Very, very interesting. What I've done is we're going to go into the Q&A session now. We've got a couple of questions. I'll just put mine and Alex's contact information up there. We'll leave that up there for in the foreseeable future. For the rest of it, please do write it down. If you have any questions after the webinar, please do reach out to us. I can see the first question here is about with AI and harvest now, earn later. I've also heard it called harvest now, decrypt later. And how do we protect the very weak session initiation protocol mobile gateway authentication? It's a bit of a tangent to the sort of network signals that we're talking about now, but quite happy to answer it in the sense that, yeah, I think from my perspective, when I think of harvest now, later, I think of quantum and harvesting all the data now. I think really when it comes to that sort of area, it can be a case of, I think the quantum decryption element or the quantum encryption element of the market is so far away. I think it could be, yes, it's decrypted and then it's earned, but obviously with the decryption, I'm taking it on board to mean once traditional encryption methods have been traditional methods can be broken by quantum computing. A little bit of a departure from what we're talking about today, but I'm very happy to give a more thorough answer on email. And one for you, Alex, is talking about your solutions and is this built on the Aduna Kamara standard?
Yeah, it's a great question, and actually really appreciate Andy Cook jumping in there and clarifying a little bit. So I want to differentiate between Aduna and Kamara. So Kamara is a kind of standard set as a kind of global standard across all telco networks. So we are Kamara compliant and really building our APIs around that standard. We do have a few non-Kamara APIs that are kind of the future of where we expect Kamara to go, that are more kind of cutting edge or on the bleeding edge, but almost all of our APIs are Kamara standard, especially when it comes to the number verification, SIM swap, KYC match. Those are all meeting Kamara standards. Aduna is a bit separate from the Kamara standard. So Andy, again, shout out to you. Thanks for clarifying that in chat.
Perfect, thank you very much. I think I've got one more question that's come in. Who are some of the major players using Nokia's network as code platform? I'm not sure if you're able to answer that at the moment. I'll leave that one with you.
Yeah, it's a great question. So definitely something that I'd be happy to answer in more detail over email. We've got some really great kind of demand side partners using this platform. So we've got Summit Tech, which is a kind of journalism platform that's really focused on events and AR experiences, more focused on the quality on demand side, less around the kind of fraud and identity. We've got WaveXD, which is a prefab marketplace that's helping other organizations better use and consume these APIs. So again, I'd be happy to answer that question in a little more detail over email, but we've got some great players or customers on the Network as Code platform.
Perfect. I think just before we finish, maybe some quick closing remarks, Alex. I think just from my point of view, I mean, I've just from the network signals element of it, I've always seen just APIs in general. They've been around for very, very long time. It really seems to be with the sort of the evolution of networks that we're really exploiting the fact of what these networks can do. And I think on the fraud side, as fraud has evolved, the fraudsters are always just going to try what they can to exploit money. APIs and the signals from networks seem to be like the next tool in enabling a lot of different companies, including banks and fintechs, in identifying the fraud and putting themselves essentially, I'm not going to say fight fraud, or I'm not going to say eliminate fraud, because I don't think that's realistic, but it puts them in the best position to detect and mitigate the impacts of fraud and the future of fraud as well. I'm not sure if you agree.
Yeah, I completely agree. Look, APIs are not kind of something new. I didn't mention it during the intro, but I actually come from a company called Rapid API, which is a global API marketplace. So we've been running the world's largest API marketplace for over a decade now. And that's part of what Nokia acquired about a year ago and brought that technology, both the global marketplace as well as the technology powering that global marketplace. And so what I think is really interesting is that these are not new paradigms or frameworks of how data is being exposed to third-party partners. You look at open banking, which they've been running the open banking initiative for, again, over a decade to help take the data and services from banking and expose that out to partners. You look at Stripe as kind of a global aggregator of payment processing. And I think that's the kind of closest analogy I would apply to network APIs, that we're looking for a standard way to easily enable developers to connect to these data and services. And that's what the vision of Network as Code is provide a simple, easy to use way where these developers shouldn't need to know the complexities or intricacies of how that network is operating behind the scenes. They should just get a simple and easy to use interface, whether that's through kind of traditional RESTful APIs or looking at some of the kind of more cutting edge ways of MPC servers or agents actually consuming this data. And so those are all things that Nokia is looking at. But yeah, I completely agree. It's more a shift in the networks being ready to deliver this technology, not necessarily that APIs are the most revolutionary thing to ever happen.
Yeah, completely agree. Well, again, Alex, thank you very much for your time today. It's been very informative of hearing about what Nokia is doing in the space. I certainly feel, as an analyst working in the telecom space for more than a decade, APIs are probably one of the more, or should I say, not APIs, but the fighting the technologies that help fight fraud. I think is a big leap forward in telecoms, one of the biggest ones in the last 10 years. Excited to see where it goes. Thank you very much for your closing comments. If anybody has any questions related to the information that Alex and I have given today, or would like to reach out, our contact information is on the screen. After the webinar, at the very latest, the beginning of next week, you will be sent a link to the video and a copy of the slides. But that's it for Alex and I today. Again, Alex, thank you very much. And for the rest of you, please enjoy the rest of your day. Thank you.
Thanks, everyone.